Today, we're going to start the conversation with David Evans from Sentiero Ventures. David, if you could please unmute your line and tell us what Sentiero Ventures is doing, that would be great.
Awesome. Well, thank you for having me, Samana. Really appreciate the opportunity and really love what you're doing with 1By1M. I'm the managing partner at Sentiero Ventures. We are an early seed stage venture fund focused on AI-enabled B2B vertical software. We've been investing in AI since before it was cool, and I've worked in AI since long from the gray hair.
So tell me more about what, before the venture firm, when you said you worked in AI, what kind of AI did you work in?
So I started my career in AI building predictive models for NASA in the late 90s. So we were predicting whether there'd be enough components of the spacesuit available for the spacewalks associated with putting up the International Space Station. But the ultimate irony is we're talking about the space station coming down now. I was part of putting it up in the late 90s.
All right. And how big is Sentiero Ventures fund size?
So we're a $15 million fund too right now.
Okay. And what check sizes do you like to write?
So we typically invest anywhere from $250 to $750 per investment. And total allocation for any individual deal is somewhere between $1 million to $1.5 million.
And you said B2B is your focus, yes?
Everything we do is B2B, generally verticalized software.
Generally verticalized software, okay. And define seed for me. You said your seed stage. Define seed for me. What do you want to see in the seed deal that you would feel comfortable writing checks for?
Absolutely. We're a little bit of a tweener. We're kind of a late pre-seed or an early seed. So for us, we don't have any minimums in terms of revenue, but we want to see a company with a full product ready and some proof of market. So generally speaking, it's going to be the early signs of market traction. So you're starting to get user adoption, you're starting to get paying customers, enterprise software. You've got your first couple pilots with enterprise organizations, but we're not a true seed fund that says, don't talk to us until you've got $500,000 in revenue. We'll invest. We've made investments everywhere from zero revenue and simply pilots with enterprises all the way up to 2 million plus in annualized revenue.
Okay. Now, I'm going to focus the conversation on what you're doing in AI, your AI investment thesis, but just because you talked about your stage in quite a bit of granularity, there's a question that I want to ask that is very contemporary, and I think it is on a lot of minds right now. You know, there is this vibe coding and no-code Cursor and Lovable and all these products, all these apps through which you can get an MVP out fairly quickly. And especially in vertical B2B and also in B2C these days, there's a lot of this going on. The MVP development, very rapid MVP development and getting it out there in the hands of customers is really accelerating. What are you seeing and what is your point of view about this phenomenon?
So I think it's really something that we've seen for a long time, right? The speed and pace to MVP or concept just keeps getting faster and faster, right?
Yeah.
You know, saw a lot of low-code tools where you could use Webflow or Airtable to build an early proof of concept to be able to get in front of customers. The challenge that we see, or the thing that we see that hasn't really changed, especially in vertical B2B software, is that there's still a good 18 months between conception to complete product, right? To sort of characterize as minimum sellable product. And it's a key distinction, right? MVP is minimum viable. It's the minimum that you can put in front of someone. Minimum sellable is the thing that is the minimum amount of features, functionality, workflow, and user interface that's required to actually start to develop repeatable sales. And it still takes about 18 months, right? Because one of the things—
Not anymore. That's what the question is. If you look at what's happening in the market right now, there are companies that are going, I mean, there is a product that was built on Lovable, and in 48 hours, it went to 3 million ARR. And, obviously they're using some no-code tool that obviously there's enough functionality for people to want to pay. Now, the question mark still is around how stable is this product? How, is this the final product? It may have to be rewritten. It may have to be rebuilt, re-architected. There are lots of question marks, but it's no longer minimum sellable product is not 18 months away anymore, is what I'm seeing.
In B2B software, I would argue that it's still the 18 months, because the exact point that you just raised is how stable is it? How reliable is it to actually get to the point where you can sell into the enterprise, to sell into the middle market? You're asking people to take a risk on how they change their workflows, on what they buy off on software. So you still have a time period where you need to bake in all of the underlying questions, because we all find this as entrepreneurs, right? Like that, the MVP, part of the reason why lean startup became such a really big trend in early stage software is because, your view of the world, even if you know the problem you're solving, you know it intimately well, you always have a narrow lens on that problem. Until you put it in front of customers, and multiple customers, you're going to learn new things about how the problem works. So we can iterate more quickly, right? But it's still going to take us time to get to that 8 to 10 customers that give us a broad enough diversity of opinions and a broad enough diversity of feedback to be able to sort of fully get to the point of where I have what I would consider a truly commercializable product, and not just catching lightning in a bottle, catching experimental budgets or speculative budgets.
Yes, your point is well taken, but I think for proof of concepts and stuff that gets the conversation going for larger deals, this is a very interesting trend that is happening, including paid POCs and paid demo projects, paid test projects.
Oh, absolutely, and it's one of those. It makes it easier to get started, but I think what we're also seeing as investors is we're going to start to see the bar get raised in overall functionality, right? The demands on what the software does and what the tool does is going to sort of get proportionally raised. Because,
yeah, which is the question about what should be, venture funded, because there's the counterpoint, the other side of the fast build point is that copycats abound, right? If there are too many copycats, that's not conducive to venture capital funding. But there comes the question, where is the exit barrier? Where is where are the integrations that are going to create deeper, longevity within the account and not quick flip into another product, a cheaper product, etc. So good. This is the discussion I wanted to have. Before we dive into AI, my other question about your fund is, what is your geographical preference in what you want to fund?
Sure. We invest exclusively in the U.S. and Canada.
But all over the U.S. and Canada, not regional?
No, we're anywhere in the U.S. and Canada. It's really just a matter of, given the size of our fund, we look to mitigate cross-border risk and currency risk as much as we possibly can.
And where are you located?
We're based out of Dallas, Texas, but I do have one of my partners is based in the Bay Area.
Okay. All right. Tell me about your AI investment thesis.
So for us, and to kind of build on something you said in terms of how do you get sticky? How do you know what to invest in? Generally speaking, we're looking for companies that really meet, call it, two criteria. One is unilateral, and that is AI is core to the value proposition. So if you just have a button that says click here to do something AI, we're really not interested, right? Like, that's the AI features are table stakes. And the way I describe it is Uber is a mobile company, right? If you take away the mobile app, Uber no longer exists. Amazon is an e-commerce company with a mobile app. If you take away the mobile app, Amazon still continues to do business. They can still continue to exist. They're not a mobile-first company like Google. So for us as investors, we are looking for companies to extend the analogy. We're looking for companies where AI is to that company the same way mobile is to. If you take AI out of the equation, there is no company left. Great example of that is one of our companies, ScaleStack. They have no user interface. It's a pure agentic solution that works in the background and works with the existing tools and products that company already works with. But there is no user interface. Nobody logs into ScaleStack to do anything. It's pure AI. It's pure agentic backend. The second thing we look for is really one of two things. It's either do you have a data moat or do you have an algorithmic moat? And that's how you stay sticky. And to answer that question you sort of posed a minute ago is that's how you have long-term longevity and you avoid you don't avoid the copycats, but you mitigate the incidents. If you have some data set that doesn't exist anywhere, or if you have some level of algorithmic structure or workflow that doesn't exist or is incredibly difficult to replicate. So those are really kind of the two things. Are you AI first and AI native? Well, and do you have a data or algorithmic moat over your competition?
So let's double click down on some of the investments you have made that fit these specs, so to speak.
Yeah, absolutely. So one of the examples on a data moat is a company by the name of SingleKey. It's actually from our first fund. SingleKey works with independent landlords to do background screening, rent collection, and ensuring and having a unique insurance product that if a tenant breaks the lease or needs to be evicted, they insure against the losses in continuation with it. What SingleKey now has is because of that process that they facilitate, they know what the characteristics of a tenant were when they applied to rent an apartment. They know when they paid. They know if they needed to be evicted, and they know if they broke their lease. Right. So that data set doesn't exist anywhere else for independent tenants. That's what you can call a data moat. They've been doing this now for nearly 5 years. So you've got 5 years worth of data that even somebody coming into the market new, you don't have that longitudinal data. You don't have the different economic backdrops. That's a company with a data moat. When we talk about an algorithmic moat, we have a company called Geminis. And what Geminis does is in training machine learning models, they incorporate both the laws of physics as well as the data, right? And they've got a proprietary approach to utilize those two things together to require less data and less compute time to achieve not only equivalent results, but better results than you would with just the data alone. So those are two examples of companies in the portfolio that kind of fit each one of those buckets that I described.
And what are you looking for if you were to project out? What excites you? What kind of things? What trends are you monitoring that you would like to see deal flow around?
So I think one of the things that we're most excited about is something that started most recently is what we characterize as services software. So where rather than making people readopt a new piece of software to do a thing, just let them continue to do things the way they used to do it. And you, as the startup, are responsible for creating the transparency. You create the opacity on the back end. Right? Don't make somebody adopt a piece of software to do a thing. You can just offer that as a service, and whether it's being automated via AI or whether it's whether you've got humans in the loop dealing with it, that's on you as the startup to ensure that you have the proper handling on the back end. The customer just pays for legal services. They pay for freight scheduling. They pay for tech support, and it's on you as a startup. And I think similar with that ties into another trend that we're looking at that I'm most excited about personally is really rethinking the user experience of software, right? It's not going to all be chat buttons and chat boxes, really rethinking the utility of software and companies that start to rethink how should CRM actually work, right? how should ERP systems actually work? Not just adding new buttons to the existing technology, but rethinking the ways that we should interact with machines as we end up in kind of this new era of AI.
So, you know, for the last couple of years that we've been having these conversations, let's say roughly with the high adoption of ChatGPT and then all the competitors that have flooded the market, et cetera, in the venture circles, especially your lane, the B2B lane, vertical B2B lane, most of the VCs are talking about human in the loop. That's what they're seeing in the customers. That's what they're designing, their portfolio companies are designing for. So I would say if I were to kind of synthesize my last 2 years of these conversations, human in the loop dominates those conversations. And your point about service companies, AI services companies, there is a phenomenon, with the cloud computing, the software as a service movement was do it yourself. Software companies were selling software as a service, which customers were using. And now the service as software, let's say, it's not exactly software, but it's if you're selling pure services, that's do it for me. That's no longer DIY, that is DIFM. And that's also, I think, is coming up in a lot of the vertical B2B solutions. That is coming up quite a lot. My question to you is, and my own perspective has actually shifted a little bit after 2 years. In the last 2 years, I have also been more or less in the human in the loop mode. And I think for the next 3-4 years, it's still probably going to be human in the loop. But there are more and more conversations I'm having and hearing more and more people talk about the immense development and immense progress in AGI that removes the human from the loop. And agentic AI is just the architectural movement in this direction, but there is a broader tsunami coming somewhere down the road. We don't exactly know when it's coming, but there is, this software company that Mira Murati, the founder of, founder CTO of OpenAI, has started and raised $2 billion. They're going after AGI. OpenAI itself is going after AGI. AGI is starting to become more present in the conversations, and I don't think it's ready. I don't think it will be ready immediately, but it's probably not that far away, and that is going to change the game substantially. So when you're investing, how are you thinking about this looming possibility?
I mean, I tend to take a little bit more skeptical view of where we're at in the life cycle of development of AGI. I look at it because we make this immediate leap that the current architecture of LLMs is a precursor to AGI. And I don't know if that's really the case. Most of the literature and research that I've read is that we need to sort of start fresh, we need to start clean. And that's part of the reason why companies like Thinking Machines have raised so much money, right? Is that we can't just take what we already have and build on top of it. If that was the case, you would just see OpenAI and Anthropic and others continue to build on top of it. But I think the longer tail, if you think about AGI, is it's really to some extent the same with LLMs. It starts to make tools and processes scalable that haven't been scalable in the past, right? They've always been sort of resource constrained or resource bound by the capacity of how many human beings we have. And generally speaking, across the globe, we're actually on a downward trend in terms of the number of humans, right? Like we're in most of the developed world, we're below the population replacement rate. We don't have enough people to do the work. So I think when you take a view of abundance on where the market goes, and you take a sort of positive view of what AGI could do, is it just reshapes the complexion of what work is. It reshapes the complexion of what services are available based on where you're at in the market, right? And how scalably we can do that. And one of the things that we get excited about just with the current state of AI, right? When we talk about that service and software, you can now start to deliver, tools and services that were only available for large companies are increasingly going to become available to smaller and smaller companies, just because we have the scalability that I couldn't serve a small company before because it just wasn't profitable. But if I can automate 98% of the interaction with that small enterprise, I can now take them on as customers, and it now becomes an opportunity. And that is an active dialogue with a lot of our portfolio companies, right? It's like, what does that down market scale look like? When we do market sizing calculations, you look at what part of the market is going to start to become accessible that 5 years ago never would have been accessible. So I think when you look at it through the lens of a positive sum, that AGI future, a lot of the nature of work is going to change, but I don't think it's going to be, completely supplanting what we do as human beings.
So I'll give you my take on this. There is a school of thought that is that there will be no work. In a complete AGI world, there will be no work. So that is a school of thought, and that school of thought is also quite fleshed out. But the way I was thinking about the development of AGI is the emphasis has been on language, right? The huge, highly accelerated progress that has happened has been on LLMs and language. And in vertical AI, we see a lot of small language models doing actually much better work, less hallucination, less cost, and still providing tremendously effective automation and value. But there are other ways human beings learn. There's visual learning. There is auditory learning. There is smell. And I just recently read about a robot in Brazil that is harvesting fruits by smelling with sensors the ripeness factor. This is a good example of starting to bring in more of the 5 sense learning, as opposed to this only language, only one-dimensional learning that is not complete as far as how humans learn. So I think in terms of the development of learning models in general, there's still a lot of ground to cover, but it's not impossible that ground will be covered. To your point about accessibility, absolutely. You talked about the developed world that lacks people who can do certain things and enabling them to do certain things with AI or robots. That's one angle to it. There's also the developing world. Africa population is exploding. Indian population still is very high. It is starting to go down, but it's still a very, very large population and very large unemployment. These countries have very, very large unemployment. Even in China, even though population decline has started, it is still a very large population and very, very large unemployment. So for the foreseeable future, if you look at this coming decade or 2 decades, 3 decades, we're talking about, this is not a window in which the world population shrinks to a much smaller level. So I think there is, the positive side of it is everything becomes more available to people who couldn't afford it more. Medicine, healthcare, education. These are the great positives of the AI revolution. I think one of the things I'm very, very bullish about is AI personalized tutoring, which can really impact education, and personalized healthcare at scale, robotic surgery, and all of this. This stuff is really, really exciting and fully additive. there is absolutely no con to this. This is like complete pro. There's no con to it. But then there are other questions that would emerge through this process is, what do we educate people for? For the children who are not yet in a mature phase of life, just getting born or in elementary school, middle school, even high school, who are going to be stepping into a world that has a very different configuration vis-a-vis work. What do you train them for? This is a question that is unclear at this point. I'll let you weigh in, David.
It's absolutely something I think about very, very frequently. I've got a 12-year-old and a 9-year-old, and I think the benefit that I have is that my kids still have, call it 8+ years or more, kind of under my umbrella, right? And I think a lot of the question marks of what is the labor market going to look like, what are jobs, like even I built my career as a software developer, sort of coding at 14. I got my first job in tech at 19. My kids are likely not going to be able to follow the same pathway because I got hired in the middle of the .com bubble because they just needed a body to throw at writing code. Well, right now that's cursor, right? Like you need to scale the number of bodies that you have churning out code. Well, kind of do that with agents via Cursor and Replit and other sort of coding tools. I generally look at it and say, but at the end of the day, the core piece is there's still somebody that needs to be providing the guidance, that needs to be providing the requirements and trying to get the context of the software. So when I think about it in terms of my kids and the things that they need to learn, I mean, not naturally they need to learn the basics. You still need to know how to read and write and math, computer science from a fundamental perspective. But they still, the piece that's missing from the education system that we need to try to provide as parents right now is the contextual understanding, right? Like I learned to be a senior level engineer to be able to analyze requirements and manage teams and manage broader context and architecture. I learned that by churning out code for the first 3 years of my career. My kids, if they choose to go into technology, are not going to churn out code for the first 3 years. We need to find ways as parents, but also as an education system, to start to replicate some of those experiences so that they're job ready when they get
Yes, I think the education system will have to go through a significant change to adapt to this new world.
Absolutely.
All right. Well, very interesting conversation, David.